Welcome to today's market analysis for September 18th, 2025. Buckle up, traders, because we're about to dive into a sea of candlesticks that's as choppy as it is revealing. Today's market opened with a balanced sentiment, but don't let that fool you. We're seeing a technical tug-of-war that's setting the stage for some serious action. Let's kick things off with our market snapshot. The day began with an air of uncertainty, quickly evolving into a technical analyst's dream, or nightmare, depending on how you look at it. We witnessed a staggering 766 instances of doji and near-doji formations across the board. That's right, folks. Indecision is the name of the game today. With consolidation phases gripping both large-cap indices and those high-octane tech stocks we all love to watch. Now, let's break down the candlestick structure that's painting our charts today. The most frequent patterns we're seeing are like a who's who of technical analysis. We've got doji and near-doji leading the pack, followed by 143 stocks showing bullish engulfing patterns. But hold on to your hats, because we're also seeing 297 stocks with bearish engulfing patterns and 257 flashing the ominous hanging man signal. When it comes to our view by duration, we're primarily leveraging daily candlestick intervals. But don't worry, we're not stopping there. For those major reversals and breakouts in trending sectors like technology, healthcare, and energy, we're zooming in on the 15-minute and 16-minute charts to get the full picture. Let's dive into the technical interpretation of today's market. Those widespread doji formations we mentioned, they're pointing to a market at a critical inflection point. We're seeing several key stocks and ETFs showing both bullish and bearish engulfing patterns. Take close attention to those bullish engulfing signals, especially in oversold sectors. They're waving a big red flag for increased reversal risk, and could be prime territory for some juicy swing trades. But it's not all sunshine and roses. The bearish dominance in hanging man and bearish engulfing patterns is particularly pronounced in utilities and large-cap industrials. This suggests we might be in for some downward pressure in these areas. Now, let's zoom in on our sector and industry highlights. Technology sector is leading the charge in bullish reversals. We're seeing bullish engulfing patterns popping up on both hourly and daily charts, with mid and small cap software and chip stocks stealing the show. If you're on the hunt for undervalued names in this segment, now might be the time to pounce. Shifting gears to utilities and energy, it's a different story. Hanging man and bearish engulfing signals are dominating the landscape. These patterns are most visible on daily candlesticks and are getting a big thumbs up on the 60-minute time frame. This suggests we might be looking at overbought and overvalued conditions among large caps and energy majors. In the healthcare and real estate sectors, we're seeing some interesting developments. Bullish Harami and Morningstar formations are making their presence known, mainly on the daily interval. This could be signaling potential uptrends and relative undervaluation, especially among mid-cap healthcare providers. When we break it down by capitalization, large-cap utilities and energy sectors are showing the highest frequency of bearish patterns today. On the flip side, small and mid-cap technology and communications stocks are flashing an outsized share of bullish signals. This points to a rotation into undervalued subsectors that savvy investors won't want to miss. Let's talk sentiment and outlook. The prevailing setup shows high investor caution with indecision, as evidenced by all those doji and near-doji patterns we've been seeing. Sectors dominated by bearish candlestick counts like utilities and energy are signaling a market that's primed for profit-taking. Meanwhile, the technology and healthcare sector's bullish patterns suggest we might be seeing new uptrend leadership, especially in value and growth midcaps. It's worth noting that markets remain closely tethered to technical inflection points. Traders are keeping a watchful eye out for confirmation on upcoming macro data, so stay alert for any sudden shifts. Now, let's break down the numbers with our summary table. We've got 766 doji and near-doji patterns spread across all sectors, indicating widespread indecision. Bullish engulfing patterns are showing up in 143 stocks, primarily in tech and mid-small cap sectors, suggesting these areas might be undervalued. On the bearish side, we're seeing 297 bearish engulfing patterns in utilities, energy, and industrials, hinting at overvaluation. The hanging man pattern is making an appearance in 257 stocks, mostly in utilities, energy, and large caps, another bearish signal in potentially overvalued areas. Lastly, we've got 363 bullish Harami patterns in healthcare and real estate, pointing to undervalued opportunities in these sectors. As we wrap up our analysis for September 18, 2025, it's clear we're dealing with a complex interplay of candlestick signals. Doji and reversal patterns are setting the scene across all capitalization tiers. We're seeing overvalued signals concentrate in large-cap utilities and energy, while most bullish setups are cropping up in undervalued technology and healthcare names, particularly in the small and mid-cap universe. Today's most actionable patterns show that short-term sentiment remains cautious. But don't let that fool you. Rotation-driven breakout opportunities are strong in select industries, and savvy traders will be keeping a close eye on these developments. Remember, we've primarily used daily candlestick duration for our primary signals, with 15-minute and 16-minute intervals adding depth for sector-specific reversals. This multi-time frame approach gives us a comprehensive view of the market's technical landscape. As we close out today's analysis, keep in mind that the market is a dynamic beast. The patterns we've observed today are painting a picture of a market at a crossroads, with potential for significant moves in either direction. Stay vigilant. Keep your technical analysis tools sharp. And remember that in the world of candlestick charts, today's indecision could be tomorrow's breakout. Remember, whether you're a day trader or a long-term investor, understanding these candlestick patterns can give you a crucial edge in navigating the complex world of financial markets. Thank you so much for watching. I hope this video helped you out. We will see you back here tomorrow. Before you go, please leave a comment, smash that like button, subscribe and click the bell to be notified when new content is available. The information presented in this report is intended solely for entertainment and informational purposes and does not constitute financial, investment, or trading advice. All opinions, analysis, and statements expressed herein are personal views and are not recommendations to buy, sell, or hold any securities or assets. Market data and any related commentary are provided as is and may not be accurate, complete, or up to date. Neither the author nor the publisher assumes any liability for financial losses, damages, or other consequences resulting from actions taken based on the information contained in this content. Please consult with a qualified financial advisor or conduct your own independent research before making any investment decisions. Investing in financial markets involves risk, including the potential loss of principal. This content is purely for entertainment purposes and should not be relied upon for any financial decisions.